Hey, everybody. It is Chuck Barone on Monday, May the 20th, 2024. Here we go in another week of madness, guys. It just keeps getting better and better. You see all the political stuff going around. The market's pretty much shrugging everything off these days. They don't care about inflation, geopolitics, politics. Who knows what is making this market fly like it is? I guess it must be just momentum, if nothing else. Craziest times I've ever seen. I've been watching these markets a long time, guys. Never seen madness like this. Anyway, before I get rolling, let me take a half a second. Welcome everybody to the show. Nice to see all my friends, Attila and Salty, holding down the fort on the live chat. Thank you, guys. Nice to see Ghazi on there. Oh, Mike, good. Nice to see you today. Don't worry, I'm going to get that intro music back. I sent Jake a text, asked him to send that to me so I can stick it on a thumbnail in the beginning. We'll get that done pretty quick here, guys. Anyway, welcome to the show. Thanks for your support. You know it means the world to us, guys. All right, let's talk markets. So today, market's a weird day because there's really no data today, or really, for the most part this week, it's going to be a pretty quiet week as far as data goes. So who knows what madness will move these markets this week. Of course, we get a couple Fed yo-yos out talking. That's not helping the markets, although it shrugged it off pretty basically, no problems. And the madness rolls on. Okay, so let's look at markets today. Stock market ended mixed. The Dow actually falling, down 196 points, 39,806 on the Dow. The NASDAQ up 108, breaking a record, guys. Up 108 points, 16,794, new record for the NASDAQ. The S&P up just 4 points, 5,308. What was interesting about the S&P today, the S&P is composed of 500 stocks. 52 of those stocks, so 10% of those stocks beat their 52-week high on prices today. So S&P just super top heavy. You got 10% of the index making a 52-week high all on the same day. You can see this market's just got massive momentum going. Only question going to be, how long can it last, and what is it going to be that finally breaks this market down a little bit? You know how it goes. It's going to happen suddenly. There's going to be one, whatever the case is, and the market's just going to reverse itself. You'll see how that works. We'll talk about that when the time comes. Bond market today, well, bond market sold off, but not a big sell-off. The 10-year up 2 basis points, sitting at 4.44%. The 2-year up 3 basis points, 4.85%. So not much happening in the bond market. The thing to watch, guys, is this 10-year. The 10-year is the one that's linked to mortgages, credit cards, and everything else. I am feeling better, and I did test negative, so I'm back to normal. Yay. Anyway, bond market, this 10-year, this is the one, guys. If this stock market rallied when this 10-year got around 2.4%, or 4.4%. Market started rallying. So I think if we see this 10-year bond up to 4.7, 4.8, you'll see stocks start to slow down. If the 10-year gets anywhere near 5, that would be probably a catalyst like I was talking about that could turn these markets down. All right, dollar up 12 basis points today. Very small rally on the dollar, 104.61. Still nowhere near the highs it had just very recently. There's really no reason for the dollar to be coming down. So we'll see if it can rally itself back up, or there's some, the dollar. Well, I can make a case for why the dollar should be weaker. I can make a case for why the dollar should be stronger. So it's probably priced about right now. Me personally, I'm a strong dollar kind of guy. I'd like to see it rally up. Precious metals today, another update for precious metals, gold and silver. Gold up $11.50, $2,426.90 for an ounce of gold. Great number for gold. Silver rallies up 30 cents, $31.77 for an ounce of silver. Man, I gotta say, silver was the surprise. I've been telling you guys it was going to rally. I didn't expect to see it jump like it did. I mean, it was $28. We looked like we had big resistance going to 30. Boom. Now it's past 30, past 31, looking like it's on its way to 32 and up to 35. Go silver. Oil today down 39 cents, $79.67 for a barrel of West Texas Intermediate. This was the number that really surprised me today with all the drama in Iran, whichever. The president and the Minister of the Interior, which I'm assuming has something to do with their oil business there, both being killed in this helicopter crash. We don't know if there's any nefarious foul play with this crash yet. They're just starting to investigate it. It took them a while to even find the helicopter, apparently crashing in foggy conditions. Well, I would think that oil would have moved up pretty significantly on this news. Nope, not even a blip. Bitcoin up $3,430, $69,618 last I looked. Looks like Bitcoin gonna get ready, bang, bang, banging at that 70,000 again. We'll see if we can get above it. This is going to be the resistance for a little while. We'll see if we can get it above there and we can hold it. Would be a great sign for the next leg of the Bitcoin rally. All right, as I do every Monday, let's talk about the data we're going to get today or this week. This is going to be a quiet week, though, guys. It really is kind of a weird week. So I'm going to guess everything's going to be loaded to the last week of the month next week. So it's a quiet week for data, basically nothing for today or tomorrow. On Wednesday, we'll get some real estate data with existing home sales and the mortgage bankers index, which is really not much. We're expecting existing home sales to be down because there's no existing homes for sale. Thursday, we'll bring the usual weekly unemployment data. It's expected to be 220,000 this week, down from 222,000 last week. Also, we'll get new home sales, which are expected to be down, and the Freddie Mac survey, which will show mortgage activity being down pretty significantly. Friday, which is going to be a short day for the bond market. I guess they're going to take Friday before Memorial Day, cut the day off early. We'll get durable good orders, which are expected to be down 0.5 point from up 2.6% last month. So that's a pretty big fall. And we'll get more from the University of Michigan survey, manufacturing, consumer data, and all kind of important stuff. All right, let's talk about news today. So yeah, as you can see, quiet week for data this week. All right, news. So as I mentioned, the oil business completely shrugging off Iran, apparently believing that this disaster for Iran will not affect their oil output, will not affect oil prices. I think I don't know if that's possible. I think oil producers always want oil prices higher, right? I think that this gives them an excuse. Somehow or another, they'll twist this around to make it a production thing, or even an uncertainty of production. We saw what uncertainty with transportation can do, right? Now we'll see what uncertainty with production can do. I think it's good. It was just a weird thing. I really expected a spike today in oil because of this. Oil went down. Pretty surprising thing. Data today coming in, Amazon about to overtake Walmart as the world's largest retailer. They were creeping up. They're still behind by about, I would say, $400 or $500 million a year in sales. But Walmart's growth, they're trying to get their growth each year to 6%, which is difficult for them to do because 90% of people in America are already shopping at Walmart. So they need to find a way to get those shoppers to be spending more, not to be trying to find new shoppers from the remaining small portion of the population that doesn't already shop there. In the meantime, Amazon's market share much smaller, and they're growing at 12% a year. So they're growing at twice the pace of Walmart. So it won't be long, you're going to see Amazon sales finally surpass Walmart's. Amazing, amazing story Amazon is. Ivan Boesky. How many of you guys remember that name? Um, this was a guy in the 80s when I was just getting started at Lehman Brothers who was literally a legend on Wall Street, the biggest arb on the planet. This was a guy who was making hundreds and hundreds and hundreds of millions of dollars. He actually got funding from Drexel and had the first $1 billion arbitrage fund, which is for that kind of business. And at that time, absolutely astounding because arbitrage is pretty risky. You're basically, risking your money. It's not like investing so much. You're betting, not investing. This was a guy who was in the original Forbes 400. He was the darling of Wall Street, was a guy who didn't shun publicity like a wild Wall Street guys do. He actually sought it out, was convicted of insider trading, was getting some of the stories that came out after, and some of the things he did were just amazing. Was getting insider information from Dennis Levine, from Marty Siegel, from investment bankers all over Wall Street, paying them off in briefcases full of cash. The old, they should have made a movie about this story. It would have been amazing. Ivan Boesky was the model that Michael Douglas used for the Gordon Gekko character in the movie Wall Street. Boesky dies age 87. He went and did 2 years in prison, ratted out everybody, including implicating people who were not doing insider trading with him, like Michael Milken, who was recently pardoned by Trump on his way out of office. Fed, we had a couple Fed dumbasses out there today. Fed President Barr, Vice Chair Jefferson, talking higher rates for longer, their disappointment at how rates were not coming down as fast as they were hoping they would. As usual, right? The Fed's they're trying to send a message to the market that these rate cuts the market's pricing in are probably not going to happen, trying to send the message subtly to these markets so the markets don't panic and have a massive sell-off, which they tend to do if they believe, especially in this environment where it's all about these rate cuts. If the Fed actually came out and said we are not going to cut rates this year, these markets would look a lot different than they do right now. So they're very subtly trying to let the market know that it's unlikely they're going to get rate cuts, talking about the disappointment, talking about higher for longer. That's kind of their catchphrase. We're going to need to keep rates higher, keep rates in a restrictive zone. You really think this number is restrictive? You think it's making people have second thoughts about borrowing money? I'm not really seeing any evidence of that. I guess the retail sales number last month was a big shocker, but that really didn't slow down the accumulation of debt for consumers, right? So the Fed trying to walk it down, talking about inflation is still coming down, but slowly. Yeah, very friggin' slowly, right? All right. Tesla shareholders having their annual meeting, voting on Musk's $50 billion pay package. At the same time, they're laying people off, man. That's just crazy to me. I get Musk had this deal, and, this was kind of deferred pay a little bit. I still say he's going to have a tough time getting shareholders to agree with this. Musk now saying, basically threatening the company with AI. We're not going to get it if you don't give me this money. It's going to be fascinating to see how this all plays out. And if they decide not to give Musk the $50 billion, how much they do decide to give him, and will it be enough to satisfy him? Or are we going to have a war between Musk and the board of directors of Tesla? Going to be fascinating stuff. Economists predicting inflation. We saw this economic board for business economists, business economists. They predict that at the end of this year, core inflation will be 2.6%. So they're already basically saying we are not going to hit our target this year. These are pretty much, they're figuring inflation is going to be higher than consumers do. The University of Michigan survey told us that, and the leading indicators told us, consumers believe inflation will be 3.5% at the end of this year. Economists say 2.6. We'll see, guys. I think that the Fed is itching to cut rates. They're desperate to do it. They're looking for an excuse to do it. The big talk is, will they come off this 2% target? A lot of people encouraging them to do so, to cut rates, to stimulate this economy. I'm kind of feeling like, I guess it's my own conservative thinking. My dad told me once that everybody thinks everybody else thinks exactly like they do. Not the case, guys. And, if the Fed was thinking like I would, there would be no chance of a rate cut until inflation was comfortably in hand. I would not be thinking about, stimulating the economy or making any politician happy or anything like that. I'd be looking at one thing only: getting the job done on inflation. That's the number one job the Fed has. That's the reason they were created: stability in the dollar, stability in the purchasing power of the currency. They haven't done such a great job with that, but I still believe they're going to stick to their guns, and they're not going to cut those rates. All right, let's talk about these zombie mortgages. Have you guys heard this story yet? Okay, check it out. Back in the bad old days of the mortgage business, back in 2000, say 5 through 2008, people were doing 100% financing on real estate, whether it was residential or even commercial. We're doing 100% financing. Investment properties, you could get 100% financing on an investment property. Didn't even need to put money in to buy a house to use as an investment property for income. They were stacking these loans with an 80% first mortgage and a 20% second mortgage to avoid the mortgage insurance or any hassles there. This was all a genius idea of Wall Street. Well, when the big kablooey happened, all of those second mortgages basically went out the window, man. Nobody ever paid a penny on those mortgages. They basically got washed away, $1 trillion worth of mortgages. Now, those mortgages are coming back. They didn't die. They didn't go away. People just stopped paying them. It's been now, 15 or 16 years. Well, guess what? Debt collectors buying these baskets of these old second mortgages for pennies on the dollar. Now, back in the old days, those lenders couldn't foreclose on those second mortgages because there wasn't even enough equity to foreclose on a first mortgage. So even if they did foreclose, there was no reward for them, just an expense, because there wasn't enough equity to pay that second. Well, now all these years later, guess what's happening? Home equity up, prices up, lots of room to pay back those mortgages. Debt collectors very cleverly buying those mortgages for pennies on the dollar, going to those homeowners, threatening foreclosure if they don't pay or start paying. It is craziness, guys. Most people believe these mortgages were forgiven. Most people believe they were, off the hook on these second mortgages. In a lot of cases, these mortgages were not small. Back then, I think the median price was around $300,000. So the size of these mortgages, $50,000 to $60,000. Well, what's happened is these credit people, these credit collectors, collection agents, I guess would be what they are, tacking on massive fees. So if the story I was reading, the lady owed $74,000 on her second. By the time they came to her to collect, they had made it $184,000 after adding on interest and fees and penalties and all the other stuff. So now they're threatening foreclosure. It's going to be a big legal fight to see if they can do this. It's going to be crazy because there's so many people, so many thousands and thousands of people across the country that have these old zombie seconds they basically forgot about them. They were gone. They were done. Now facing foreclosure or pay that debt off. So people taking out, refining their houses to pay these mortgages, these debt collectors. I was reading this person bought a basket of these mortgages, a shit ton of them, for $6,000. 9,000 loans he bought for $6,000, less than $1 per loan. So now, if he can collect from one person, he's in tall profits. If he can keep collecting, he's got 9,000 loans to work with. Very, very lucrative enterprise. And we'll see consumers going to suffer for it. Anyway, guys, that's it for the day. As always, we appreciate your support. Thanks for hitting, all of you guys hitting the like button for me while you're doing the chat here. Please hit the like button, guys. It changes the algorithms around. It gets our video out in front of a few more people every day. Helps our views get up there. We'll be back tomorrow. We'll see what madness tomorrow brings. Thank you, guys. And yeah, by the way, nobody is buying houses at these rates. I'll tell you that right now. In the last 4 months, I have done one purchase. One. I was doing 4, 5, 6 a month. One in 4 months. So that gives you an idea of what's happening with these mortgage rates. Anyway, guys, that's it for the day. I'll be back tomorrow. Thank you, Salty. Thank you, Attila, for keeping everybody amused while they were waiting today. We'll see you guys again tomorrow. Until then, take care. Thanks.